Hi, welcome to the Dummy Investor YouTube channel. This channel is something which I've started because just like me, whom I consider myself to be a dummy investor, there are many in India who want to build sustainable wealth through prudent, judicious investing, specifically the equity markets, but maybe a combination of debt and equity markets. And I could find resources from real life people who've actually done it. And I thought I'll create this channel just to share my personal experience of what am I doing with my investments and how do I see the opportunities going forward in the market, um, in the hope that it will encourage and help others and also encourage people to share more insights and perspectives from their standpoint. So it is a collaborative effort in that stand. Um, I've been in the I've been investing for the past 10 years, and in that journey, I've made a lot of mistakes. There have been phases where my interest has really peaked. There have been phases where I've been totally switched off from the markets, and looking back, there have been some very important learnings. Hard to digest, but nonetheless very important. And I feel it has helped me to sharpen my focus in terms of not just where I want to invest my hard earned capital, but also where, more importantly, not to put in money. And by no means I'm an investment guru or I'm an expert. I'm just an amateur investor. And so please take everything that I say with a pinch of salt, with large doses of salt. But I'm hoping that through my mistakes and through my experiences, others will be able to fine tune their approach or learn something or take away something from it. And that's the reason why I've started this channel. Um, Now, we are currently in November 2020, of course, and coming to this state of the market right now. Well, before even going into the state of the market, I would like to say that I'm a long-term investor. So I'm not a trader. I don't track markets on a week-to-week basis or on a day-to-day basis. I usually try to take a long view. And for me, then the more important decisions and considerations are what part of the investment cycle are we in right now with regards to the current state of the market? Is the market overheated? And do I feel there are buying opportunities? And if not the equity markets, what are the alternate asset classes where one needs to look at investing um, in order to complement the cycle of the equity markets? So that's where I come from. So you will not probably, you'll be disappointed if you were expecting some tips or get rich quick schemes or uh, ideas and suggestions. That's not the intent of this channel. This is purely aimed at people who want to build sustainable wealth or hope to build sustainable wealth over a long period of time, which they can then pass on to either their future generations or save for their retirement or really deploy it for constructive use in the society. And like I said, we are currently in November 2020. I feel the market right now, just the equity markets right now, uh, is absolutely overheated. Um, I'm sorry, I don't track news channels. I don't track uh, morning trades and all that. So I try to stay away from all the noise as much as possible and just generally just looking back at it, looking at the market two steps from a distance, I feel it's really overheated. The kind of reaction that I was hoping um, the market would give due to the whole COVID lockdown has not really manifested. I mean, there were buying opportunities early in the year when the outbreak happened, sometime from, say, March to, I would say, May to June. And personally, I did make quite a few investments in portfolio fine tuning. But generally, it is, I've personally found it very difficult to find investment opportunities. And um, obviously, what that has meant is that I've spent more of my time just reading and listening to what the legends of investing have to say, guys like Howard Marks, Ray Dalio, and that has provided a lot of insights. Um, and one thing that is playing on my mind right now is just about understanding where we are in the market cycle. And currently, the Nifty is trading at around 34, 35 PE. Now, one can argue that the market is forward-looking, so they are already anticipating a recovery in earnings for at least the large companies, and hence the price has sort of led the charge, and the earnings will follow suit. But there are downside risks to it, and especially in an environment where there are still a lot of uncertainties in terms of how soon the economy will recover, how soon companies will go back to their profit growth trajectory. Whether this whole COVID situation has fundamentally altered certain business models, certain industries. I mean, it's yet to be seen, but clearly the market has come to the conclusion that this was just a blip and we are on track for earnings. Personally, I haven't been buying anything since June. I have, I am sort of my approach right now to the portfolio is more of a defensive build-up. So clearly looking at the debt side of the house, and making sure that as with falling interest rates, there is certain exposure to debt as well. And clearly, it's an individual choice. There's no right or wrong. Many people have is the market in their own unique style. So obviously, clearly, this is not a prescriptive viewpoint. Um, um, it also depends on how your portfolio is constructed and what what's the balance between equity and debt, and within equity as well, what kind of companies are you holding. And just personally for me, the way my portfolio has evolved, the kind of mistakes I've made, especially early on in my investment journey, I feel the portfolio is in a reasonable shape. But clearly, I need to do something with where to put additional capital as and when I'm able to save for it. And as of now, I personally don't see too many market opportunities. And even if those exist, they do come with a certain amount of risk. And I think the risk part of it is very important. Sometimes we just tend to brush it aside, especially if you listen to some of the mainstream business channels. They are largely trading focused, and you'll be misled if you were to take their advice too seriously, especially for building long-term sustainable wealth. Um, So yeah, I mean, right now I feel market is probably too optimistic and too expensive. And personally, I was hoping that the U.S. elections might act as a trigger for some sort of correction, but clearly that hasn't happened. And going forward, either there will be a price correction or there will be a time correction because I don't see, uh, unless this is like a curveball event, I don't see the markets racing ahead too much further. So my personal philosophy right now is just prod ahead with caution. Clearly focusing more on the debt side of the house, but always keeping an eye open for opportunities in the equity markets. I usually operate in the space of say the 5,000 to 50,000 market cap range, and uh, but clearly it's a personal choice in terms of what investors prefer for their portfolio. Uh, so that was the opening thoughts I had about the Dummy Investor podcast series. I hope you took something out from it. Please do get back in terms of uh, your suggestions, your thoughts on or any feedback on this episode. And just I would just like to sort of close it with the fact that I have a full-time job, so obviously this is something which I'm doing outside of my work to build my portfolio. I think it's important. Many people either get overwhelmed with this being too finance heavy, especially for the non-finance folks, which most of us are, or they get swayed by the noise, in the system. And it's not a rocket science. All we are looking to do is, especially on the equity side, to buy good companies with good business models at a value price, not too expensive, but at a good price, and then just hold on to it. No fuss, no drama, um, and that's the ultimate aim. Um, so thank you for listening. I hope you enjoyed it. Have a great day.